30-year home mortgage. It used to be the first choice of many customers, due to the fact that given that the total payments are spread over a longer amount of time with the interest rate established for the entire time of the home mortgage. 30-year home loan rates are a market criterion, but is it the appropriate selection for you? The 30 years home loan is a sector criterion, but is it the appropriate option for you? Since the complete settlements are spread over a longer period of time and the interest rate established for the entire time of the home loan. This was the first choice of most homeowner. As we discussed, the plus side for a 30 years home loan is lower regular monthly payments. This attraction is somewhat dimmed by the fact that you pay thousands extra in passion. But your interest is 100% tax obligation deductible, which does lower your after-tax price. It supplies you some flexibility so that if your economic situation modifications and also you have even more cash, you can pay it off in less than 30 years, this while maintaining the low regular monthly repayments. Your repayments are smaller sized, so in truth you can acquire a larger, roomier home. To show an example of the interest difference between 30 years mortgage prices as well as among the various other rates. On a 3 decades, $100,000 loan using 7% rate of interest, your month-to-month settlement of interest and concept would certainly be $665.30. Over the following 30 years you will have paid $139,511.04 in passion alone. Currently, with a 15-year mortgage price on the same quantity, you will pay $871.11 per month, and also over the following 15 years, you would certainly pay $56,799 in passion. This would certainly save you $82,712. If you have the willpower to invest the savings from the monthly payments, it still could be a great choice to select the 3 decades mortgage. Particularly if you can discover a financial investment that the long-term benefit matches or exceeds what you would certainly conserve in a 15-year mortgage. One more factor to think about is exactly how fast you intend to accrue equity in your house or to possess it outright. 3 decades home loan rates take a lot longer to develop equity. 30-year home mortgage rates are definitely eye-catching, and the huge majority of house purchasers obtain 30-year loans because that is the longest mortgage available today. Professionals agree if they could obtain a 35 or 40-year financing, they most likely would. There are lots of other choices to think about. Possibly the greatest concern you need to ask yourself when taking into consideration of funding is, what are your monetary goals? What car loan plan will help you one of the most to get to that goal? It is plainly to your benefit to check into various other funding alternatives for the best finance available for you and also your economic objectives. It might stun you that as a result of your individual scenario there might be other plans preferable for you. Bad credit scores. Home equity line of credit. Poor credit history can boost the problem that a property owner encounters when seeking a home equity line of credit. Bad debt can be the factor for an inadequate credit score. What is a credit history? The credit score ranges the values of 300 and also 850. The credit rating is the creation of the Fair Isaac firm. Lenders who arrange for a house equity credit line utilize the credit rating in order to set the rate of interest that will certainly be billed the homeowner. Homeowners with a reduced credit rating will require to pay higher passion repayments. A score over 700 is guarantee of great rate of interest. The credit report also acts as a sign of whether a lender ought to accept a property owner's application for credit score. Decisions on credit line for the homeowner are also based on the house owner's credit score. The credit rating is a feature of the house owner's previous line of credit. In the U.S., 3 various firms maintain a document of each customer's line of credit. Those agencies are Experian, TransUnion and Equifax. If a property owner with a low credit report wants to raise that score, then the house owner has to get in touch with each of those 3 firms. The initiative to get rid of a record of negative debt and also to increase a credit report requires the disputing of false cases that cash is owed. If the homeowner can verify that the insurance claim for cash is spurious, after that the house owner has an opportunity to elevate his credit history. This action should be taken if the house owner that intends to look for a residence equity line of credit has a score less than 640. Such a rating would certainly suggest poor credit report. The disputing of a credit report is not like a shot in the dark. A study of credit score records in the United States revealed that 80% of such reports included blunders. Thus, a homeowner can have great factor to question the credit report that is being made use of to establish the rate of interest on a resident's equity credit line. The credit rating for a pair that are joint homeowners, is based on 3 credit rating from the individual with one of the most sizable earnings. This is ball game that the homeowner requires to make appropriate. Such modification may call for a composed statement per of the above-mentioned firms. Those companies will certainly after that call the house owner and indicate if more info is essential. If the homeowner is lucky, then the credit score will certainly be increased and also the rates of interest for the preferred house equity credit line will be decreased. When the house owner has a great credit score, then he will wish to stay clear of slipping back right into that region of poor credit history. This indicates that the house owners need to stay clear of the sort of investing that lugs them to the borders of their credit line. Bad debt home loans. A bad credit score home mortgage is a funding that one can obtain despite having a bad credit history ranking. Lots of loan providers supply a negative credit home mortgage, recognizing fully that their car loan is protected, given that it is taken on mortgage of your house. A bad credit report mortgage is a tool of chance for those who have negative credit score rating as well as would like leave of their financial obligation as well as begin on the road to good credit report building. By availing of a negative credit score home mortgage, you can decrease your monthly payments by settling all your financial obligations and also take pleasure in a reduced rate of interest on the current financial obligation. The loan consolidation and also settling your current financial obligations by use a poor credit home loan is a major step towards credit scores repair service. Additionally, if you can maintain the repayments on your second mortgage for about 6 months to a year, you will certainly see an impressive change in your credit report. Most popular choices readily available on negative debt mortgage are squander home mortgage refinance and also home equity funding. Both choices enable you to profit the equity currently paid into your home mortgage as well as utilize it to get yourself out of financial debt. It's finest to take care of a mortgage firm online to stay clear of financial institution partners talk around and also apprehension. It's likewise less complicated to contrast different deals, develop different lenders to make sure you are not being ripped off. Please remember the complying with while filling forms for online home loan. 1. Make certain you check out the write-ups on online home loan at the Poor Credit Home Loan Lending Institutions websites. By this you can enlighten on your own on numerous kinds of funding and be notified and approximately day on costs and also existing prime rate. 2. While looking for online quotes, do not go with a common quote which is based on your regular monthly revenue and also costs. Submit in-depth info whereupon you can get an actual precise quote. 3. Try and reach the total negative credit history home mortgage expense, i.e. consisting of the closing fees, application costs, any other costs, passion build, amortization and also financing charges and so on. 4. After using, do not forget to keep all documents gotten from the lender and also follow up with regular call to make certain points are moving on time. 5. After completion of bad credit scores home loan, strategy to refinance in concerning 3 years, through which you need to be back in good credit history, if you have actually kept up regular payments. This will aid in reducing your short-time financial debt and also maximize your future debt score. Use your negative credit home loan to the maximum benefit to get your debt rating back in line. This will certainly help you intend a safe and secure future for you and your family members. Kindly contact http://www.premiummortgagesolutions.com for any further query or support.